Death roller coaster.
Now, the article also points out from the Financial Times that large swings in prices, another critical condition for high-frequency traders to prosper, have also lessened. So they've already killed all the clients. All the people who went on the financial roller coaster are dead. A lot of the small investors, a lot of the middle-class investors, there's only a few giant traders, whales, killing each other or attempting to scalp each other, slaughter each other. And now they're saying that they need the large swings in prices, and this is one of the things that this is the disaster capitalism, the disaster financialism that we've talked about, is they thrive on chaotic conditions. They need them in order to make a profit.
The volatility has been sucked out of the system. You see this with the volatility index, the VIX index, which is trading near all-time lows because it's tracking the vibrancy of a market composed entirely of cadavers. So you've got people, dead people, who are trading through artificial life simulation machines on death roller coasters and euthanasia projects, attempting to create an economy to replace something that was viable at some point before the machines run by kleptocratic larcenists in the City of London and Wall Street moved in and destroyed the globe.
And of course, markets are hitting all-time highs again. And of course, the financial media and the mainstream media, even the BBC and Channel 4 News, are all trying to tell you to come back into the markets because, look, they're hitting all-time highs. But again, this article
let me make
here...
a point there, a quick point. If I took that to the tallest building in the world in the Middle East there, the Burj Tower, and I took a corpse up to the top floor, I would say this is the highest corpse in the world. It doesn't change the fact that it's a corpse. I mean, this rally of the stock market is based entirely on spinning dead corpses around a money hypothecator. Well, hypothecator is something I just invented.
The very fact that this article then goes on to quote, many firms say that a multi-year collapse in equity trading levels, which have declined as investors pulled funds out of the stock market after the financial crisis, is squeezing opportunities for rapid fire trades. So there's no genuine, real liquidity, there's no real activity in there because it is a spinning, churning machine that has wiped out and killed every single one of the passengers on this financial roller coaster.
Yeah.
But now they've killed everybody, so they have to loop it back to the beginning, and it's just corpses going around this eternal financial euthanasia machine.
Right, and but they get a profit on the speed at which they can spin the corpses around the financial euthanasia machine. And those profits are turned into bonuses, and the bonuses are paid for mausoleums where these profiteering war criminals at Goldman Sachs and JP Morgan and Barclays Bank can bury themselves after they've murdered the entire global population. So all they're doing is they're gaming the system to build better mausoleums for themselves and their families as dead corpse, vampire, crooks, monuments to their thievery, their larceny, their transgressions, their law-breaking, their fraud.
So Karl Marx is right. The bankers have sold us the roller coaster that will kill them, which is the high-frequency trading algorithms. Right.
Well, I mean, Marx had some good things to say. I mean, unfortunately, you can't really compare it to the current system because we're in a post-capitalist system. We're in something other than a capitalist system. It's run by zombies and corpses and vampires who are trading transfusions of blood and volatility with each other to make it seem as though they have a pulse, when they're actually just mummies and zombies and corpses and cadavers.
Well, he did predict the ultimate end would be hyper-financialization. Hyper-financialization is the equivalent of those 7 spins. It's churning, churning, churning for churning's sake. Just creating contracts and derivatives and contracts and derivatives and contracts and derivatives and spinning, spinning, spinning,
well, I mean,
spinning. Eventually, it'll all be dead.
Don't kid yourself. I mean, because right now at Goldman Sachs, they're thinking, well, the person's dead on the second spin. We've got spins number 3 through 7 to consider. We can collateralize those spins. We can monetize those spins. We can sell forward the value of the corpse as they're spinning through the death spins and sell that forward to other clients who are hedging against the fact that they might be dead or alive or partially dead or alive at any given moment in time, and then sell that to a bank as a hedge against their position owning some kind of collateralized debt obligation based on another corpse or dead people that they murdered with outdated mortgages and basic kleptocracy, and they're going to make another fee on this. So they always make money. All right, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
All righty, stay tuned for the second half. I'll be speaking to economist Konstantin Gurdgiev. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to economist Konstantin Gurdgiev. Our guest was, in fact, meant to be Sean Quinn, formerly the richest man in Ireland, now bankrupt like the nation itself. But like the nation, Quinn seems to have been hijacked by evil leprechauns. They were last spotted running naked across a field of four-leaf clovers, trading contracts for difference on pots of tungsten gold. Konstantin, welcome to the Keiser Report.
Thank you, Max. Delighted to be with you guys.
All right, Konstantin, tell us about IBRC, the bank formerly known as Anglo-Irish, which is now having its debts magically converted to sovereign debt.
Oh, IBRC is at the core, if you want, of the collapse of the Irish economy and the both political implications of that, banking implications of that, and economic implications of that. Going back, IBRC started as the bank which absorbed, as a bad bank, which absorbed together the assets and liabilities of two most insolvent institutions in Ireland. The Anglo-Irish Bank, which was the third largest bank at the time of when the crisis struck, and also Irish Nationwide Building Society, which was a smaller size bank, which also had the same problems as IBRC, as Anglo-Irish. The problems of careless loans being issued during the peak of the boom in large volumes, in large quantities, poor risk assessment, monoline lending in a sense that it was all lent into the property development, property investment, and property markets in general. And as a result of that, the collapse of the property markets has triggered the collapse of those two institutions as well. So going back, IBRC was the tool or the vehicle for unwinding the two insolvent banks. Now, 2 weeks ago, we've got a new legislation which is creating another structure to unwind IBRC. So in many ways, the government is now shutting down the bank that it was designed to shut down the other bank.
It seems a little bit like Argentina in that the debts that were incurred by speculators are now being institutionally passed on to the taxpayer, the citizen, who is going to have to deal with this for several decades, right?
Indeed, it is a shell game of debt. The debt from the Anglo-Irish Bank and from Irish Nationwide Building Society that was transferred to IBRC was still on the shoulders of the Irish Exchequer, in a sense that what they did in order to fund the IBRC is that they issued the promissory notes. The promissory notes counted as government debt officially as well. And as a result of that, because they counted as government debt and because they were fully guaranteed by the Irish government, they were eligible collateral. Now, they were eligible collateral not at the ECB, they were eligible collateral at the Central Bank of Ireland. The Central Bank of Ireland opened the emergency liquidity assistance line in order to fund IBRC on the foot of that collateral itself. There is 34 billion which was originally issued of those notes. Some of them have been repaid. Now there is about 28 billion outstanding. There was a schedule, very onerous and difficult schedule to meet in terms of the repayments of those over the years, which was running into 2031. And the government was unhappy with the cash flow which it entailed. It required the government borrowing every year 3.1 billion in the markets, rolling over that debt into effectively repayment of the promissory notes and a cancellation of the ELA. The ECB was unhappy about that as well because there was very little security on the foot of that as well. And therefore, both the ECB and the Irish government had an incentive to somehow restructure it. To a different extent, of course, Irish government had much more of an incentive. And again, about 2 weeks